Hello,
Independent
guys. And
conversation,
today
right?
we got the volcano trader, Paul. We're happy to have you here. Like you guys can see Paul right now, but he is a man full of energy. He is a man full of happiness, full of joy. And just meeting him is like an incredible privilege. And we had the privilege to have you here on our podcast, the Trade Pod. And as
So,
promised, we
welcome,
bring
Paul.
on
Well, thank you very much.
we bring on the best traders, and right now we bring on the volcano. So, Paul, pleasure meeting you. And I would love if you can a little bit introduce yourself a little bit to the audience before we start. What do you say?
Yeah,
Works?
why not? Okay,
Let's
so
go.
hello, everybody who's listening. I'm hoping that we're going to give you a really great podcast tonight. You're going to
We
learn
will.
things probably that you haven't learned before. My name is Paul Chalmers. I'm the CEO of UK Trading Academy. That is an academy in the UK. Just to give you an idea of the level of the academy itself, on the 6th of January this year, we were the only private educator in the financial industry to be awarded that we can provide a master's degree in financial trading, a fully accredited, internationally recognized qualification. So I've been running the academy since 2010. I've been trading for about 30 years now. And I started the academy. We'll go on to a little bit about that, but I started the academy in 2010 because I wanted to teach people the right way of trading, because there were so many ways people taught that I believed wasn't the right way. So I wanted to give people proper education with the right information to help them grow. And that academy has grown significantly. I speak all over the world. Since 2020, I think I've been in 12 countries, 20 cities, speaking. So I've been all over the world, especially even through COVID. So it's been quite a growth period for us, because during COVID, of course, people couldn't go to work and wanted to find ways of making money,
People,
So that's
people
where
don't
we
go to
did.
work. People don't go to work during pandemic, but volcano do go to work during pandemics.
Yes, I go to
Just
work
as
during
special
pandemic.
as you, Paul.
Now, before I started UK Trading Academy, even though I did trading, I was in very senior positions in manufacturing industry. The last role that I had I finished that in 2008, and that was operations director UK and Europe for Tyco, the 44th biggest company in the world. I ran all manufacturing for Tyco. So I was responsible for over 500 million pounds worth of operations there. So I've always tried to teach, even though when I was going and becoming more senior in positions, I always wanted to try to teach people below me. I wasn't one of those, what do they call them? Glass domed managers, where they would open the door, shout out something, and then close it again, and nobody could ever talk to them.
Yeah,
That's not me.
I guess just managers. I mean,
Yeah. I wanted to, I walked the shop floor in the main area that I was with in the UK. I'd walk the shop floor every day and talk to everybody, whether it was an operator on the line, whether it was a manager managing that particular area, because when you do those sort of things, you find out what really is happening in your industry, because people can tell you so many things. And if you're sort of remote, and you don't get involved, then you miss so much. And I think I followed that through with UKTA. I'm very involved with it. I'm one of the main teachers. When people come to the academy in the UK, in Wales, near Cardiff, then I do a lot of the teaching as well. So, I'm very, very involved. I like to be very involved to make sure people are getting the right information. So that's a little bit about me.
Hmm. And you know what? I would like to ask you how it's like being transforming from the manufacturing industry to trading, because this is significant different industries, like going
Yes,
from
it is.
manufacturing, which is a hard style, to trading. It's like you have to find a place of peace to move to trading.
Yes, you do. I think that because of the pressures that I was under, running a multi-million pound organization, and people in industry, that everybody wants to stab you in the back to get over you and above you in their jobs, So
It's just so nasty, so
yeah,
gross.
it is very, very nasty. It's a very, very nasty environment. And I think I learned to be able to control things and to be able to sort of map my route, my destiny, to make sure that I was doing what I believed was right, not just for myself, but also for the company that I worked with. Because, you know, when you work for a company, especially in the positions that I worked in, then you want to do well for them. But I
Yeah, but
think
Paul,
that that
that's literally the
pressure,
same. That's the same.
yeah, it is
But
that
think about it.
pressure.
Think about it. If market maker do not want your presence in the market, they will kick you off. They
Yeah,
don't
well,
look at retail traders,
yeah, that's
obviously.
right.
But if they don't want your presence as a small trading firm, they will kick you off immediately. That's an equivalent from for standing them in the back, basically.
Yeah, that's true. But it also, I was also very good at controlling pressure. And within trading, there is a lot of pressure. A lot of the pressure, you put it on yourself. In trading, you put a lot of pressure on yourself because the one thing that we teach, and I teach very significantly, is risk management. Okay, and keeping
Yeah,
to the trading
obviously.
plan. The thing is, a lot of people don't do that because they get worried, especially if they're in a negative position, you know, and then they do all sorts of psychological things, which makes them in the end even lose more. You know, oh, let's move the stop, it's bound to retrace. Let's move the stop, it's bound to retrace. The thing is, within the industry that I was in now, when I first started to climb the ladder, which I did very, very quickly, I was in Mitsubishi, and I was the youngest engineering manager in South Wales, you know, working for Mitsubishi. And I learned the Japanese methods of manufacturing. Now, the Japanese methods of manufacturing are very logical approach steps that you have to follow. And I've transitioned that into trading because I've used those type
Uh,
of skills and knowledge to be able to trade in such a way that I don't have the issues that a lot of people have psychologically when things go wrong.
because you have learned how Mitsubishi have built their assembly line, you want to tell me that you have learned how to trade because you literally learned from the best and the biggest, obviously,
Yes.
how they place their manufacturing process and like their assembly lines and exactly you followed it. You literally copy pasted.
Yeah. Yes, it did.
And how successful was it?
The reason that I went higher and higher in the positions was I was headhunted. You know, I was working for Exxon, Monsanto, as I said, Tyco, Mitsubishi. I worked for very big blue chip companies, and I was very successful. And the reason I was successful is I did these, you know, I would learn a method of doing things and then I would stick to it. And I knew that that method was successful. But the thing was as well, as things changed in industry, I was also flexible enough and quick enough to see the change and then implement something which would overcome that change. Just like in
Mhm.
trading, I suppose, because markets change.
I got it. So I will ask you this, Paul. Like looking at the nearest your nearest milestones in your career, how come a trader with a 30-year experience, which is not that much. I can tell you that 2 hours ago we have a discussion with a trader with 50 years of experience, and you're literally in the way to become a successful trader. Yeah, under rotation, of course. And how come you have built a trading academy that's been a world-known academy for financial trading? How come?
When I had issues in my private life, and for various reasons, I brought up the children, which meant that I couldn't do these high flying, highfalutin jobs that I was doing because, you know, the judge would say, "Where are you next week?" "Oh, I'm in Italy." "Where are you the week after?" "France." "So how can you bring up your children?" So what I actually did was that I left that high power, high roles to be able to look after the kids, basically. That's what I did because they were more important than anything. And through various ways, what I decided to do is I had to find a way of bringing in income now because I wasn't working in the job that I was in. So obviously my passion was trading. And what I could see was that the people who were providing trading education, courses, systems, indicators, it wasn't good enough. It didn't teach people properly. All it did was just sell something to make them money rather than saying, is this teaching people in the right way? And that's the reason I started the academy. I said I wanted to generate an academy where people could be taught properly how to trade the financial markets. That is my whole reason for starting the academy in 2010.
You know, there is a real famous author named Simon Sinek, and he told like his most famous book named "Start with Your
The
Why"
why.
or "Start with Why." And I think you have just nailed down the summarization of the entire book because you had difficulties in your life because of like changing the changing and the ongoing lifestyle. And from that point of view, you took yourself in hands with your better two hands and you started a trading academy to enable traders and to enable people who are interested in being able to get the right education to start getting this with their finger points. I think it's like an incredible why. I think that's the best way to start a business. And you know what? Speaking about your academy, I'd like to ask you what topics do you cover on your trading the financial markets degree?
What we do is this degree is very, very unusual. Okay, we have the degree and the accreditation is through a major European accreditation board called Aspire. Aspire accredit.
Spire.
Yeah, it's called Aspire. Aspire are in Barcelona. They are UK and European accreditation board, one of the major accreditation boards. So they accredit certificates, diplomas, degrees, masters, doctorates throughout UK and Europe. So in Paris University, in Oxford, Cambridge, Cardiff, Newcastle, Barcelona, wherever it may be, Milan, they're a very, very good accreditation company. And we actually went through 2 years of vetting with all the academies in UK and Europe that applied. And there was over 900, nearly 1,000 academies. And we're the ones that were actually chosen after 2 years. Now, the reason that they chose us was that we are able to take somebody off the street and be able to make them into a financial trader. So my premise to start anything is you know nothing. I don't care if you're a trader of 4 years, 5 years, 10 years, you will start the same as everybody else. And the most important topics, if you look at the whole of the masters, I would say my most important topics are risk management, trading plan, trading psychology.
Yeah, but those are the topics that get covered by anyone. So what differentiates you as the UKTA from the others?
When I
Because
go,
you got the coordination, or you do something better or else than anybody else.
I think what it is, it's an accumulation of building blocks that I teach first of all. I don't go into risk management. I don't go into trading plan and, psychology straight away because I'm assuming that that person knows nothing. Or if they have been trained, now let's just remember 85% minimum of all traders lose money. So therefore, 85% of all people out there have been trained the wrong way. Because if they were trained the correct way, they'd be winning. They'd be making profit. So 85% of all the stuff out there, even though people have got those, they teach them the wrong way. Because if they taught them correctly, they'd never blow an account. It's almost impossible to blow an account. Yeah, when I'm on stage, in an event, and I say, put your hands up, who's blown their accounts? And most people in there put their hands up.
9% of them probably
Yeah,
raised
they
their
put it, and I
hands.
said, but that's almost impossible. So therefore, the teaching material out there can't be right. Because if it was right, why is 85, 90% of people all losing money? It's they are taught the wrong way. That's what I'm saying. Bluntly, they're taught the wrong way. Very, very rarely I see, because I look at other training courses as well to see what competitors are doing and markets are doing. But I don't believe they get taught the right way, because if they did, then it's almost impossible to blow an account.
So just a side question.
That's the blunt answer to that, guys.
What are the requirements to be accepted into the academy?
Sorry, say again.
What are the requirements to be accepted
You
into
need
the
to
academy?
now,
If I would like to get accepted to the UKTA, what do I need to have in order to get in order to start learning?
this master's degree is very different to any master's in the world. First of all, you don't need to be in a university. Secondly, you don't need to have had prior qualifications to degree level. The entry is that you have to be over 18, and you have to have a general understanding in maths and English. That's it.
Why math is important? Or
There's no
I speak fluent English. Why math is important?
maths is important because, okay, maybe you need to ask me another question why maths is important, because the successful trading is nearly all maths.
Why do you think?
People blow their account because they don't understand
Yeah,
the
but
maths
what?
of trading.
Yeah, but how they are intervene mathematical equations into trading. You know, once of our episodes here, we brought on a Greek professor named
Mathematician.
Tanis,
Yeah.
and he's a mathematician,
Yes.
and he's been trading the markets for 4 years. And when I asked him about like
Yeah.
how he approached the market, he told me that it's all about mathematics. When I see the buyers goes up, I calculate, I like have the mathematical eye in order to understand how the market goes and like if the market works on my favor or not. I use mathematics.
Hmm.
And you are telling me right now that I need to be above 18 years old in order to get elected, in order to get accepted to your to the UKTA. And
The
I would like
master's degree, yes.
to close it to yeah to the monsters in the year, and I would like to close it with a question that how does an 18-year-old boy comes with a proper understanding of how mathematical equations in the market works before he even got any education? You know what, let's not just speak about 18 years old, let's speak about 35-year-old boy, year old man, you know,
Yes.
and how he get accepted if he doesn't have any mathematical background and
Okay.
how we absorb a mathematical background.
Let me explain what I mean by maths. What I'm talking about here is that a student needs to have a general maths understanding, something that they would get in high school, something that they would come out of school at 16 years of age. We're not talking high level maths here. We're not talking equations whatsoever. They have to have a general understanding that they can use a calculator to work out what 1% risk is on a 20 pip stop loss, and that's it. It's not a high level maths that they need. It's quite a low level maths. But if I would say any child that has gone through we have in the UK, I don't know where you are in your country, but we have something called comprehensive school that the children either leave at 16 or they take A levels and leave at 18. If they have done a standard secondary maths lessons, exams, then they're going to be fine, which is most people.
I got it. You know what, going back to you, Paul, I'd like
Yes.
to ask you a little bit about trading.
Yes, certainly.
How do you see you know what, let's take the conversation in another way. Hypothetically speaking, I'm your student and obviously you're the teacher. And I'm coming to you with a question on how asset should I be trading and how professional should I be in order to trade it properly. Let's hypothetically say that I want to trade the options market. What do I need to learn? How do I learn it? And what important components I need to cover in order to trade it properly?
Right. Okay. So with any form of trading, you obviously have basics understanding of whatever strategy there are, whether they're options, whether you're trading CFDs, derivatives, whatever it may be. Now, I go about things very, very differently. And so maybe you need to understand how I do things. My aim is to make sure that a student understands all the concepts of trading right the way through, including, for instance, money management, psychology, trading plans, but also how they go back to the basics. How does a broker work? How do they actually place a trade? What happens to the money? We go through the different types of brokers. It's a very complex process, but it's a step-by-step process that they build a little bit more knowledge each time. Now, what we also go into is we go into price action. Indicators are totally useless. Now, there's a statement for you, isn't it? Indicators tell you what you should have done half an hour ago. And look at all the people out there who are selling indicators and systems. Pretty much all of them don't work. If they did, there wouldn't be 85% of all people losing money all the time. So what I do is I put the basic concepts of trading and market movement. That is what they learn. They first of all learn about, the industry, the type of industry, the type of markets that you can trade. Then they go into and look at brokers. How do brokers work? How does money transfer? So they're starting to understand the structure, the infrastructure of the industry. Because if they understand the infrastructure, just like anything, if you understand the infrastructure first, then you can start building on it. Yeah, but if the foundation is not strong, then you're going to have a wobbly building at the end of it. Just like your education. If you don't teach the basics properly, then they will never become a successful trader. And, I've got a great reputation of being able to teach a complex subject very, very simply. I get told that it's very easy to understand how I do it, but they will get all the training that is needed to understand how the market's moved. It's based on price action, and they will learn about support and resistances. They will, we will explain to them when you see the change of a trend, when a trend starts with consolidation. So we look at all the different patterns that you can get, and then they learn strategies based on that price action. So now what they've done is and then when they place a trade, because we teach I call it the maths of trading. Yeah, the simple maths of trading. So they understand leverage. They understand all the various concepts of the maths of trading. So they know within their broker, yeah, exactly what their money can do, can't do, what they are doing, how much they're exposing, how much is their risk, etc., based within certain safety parameters. And that's where obviously the money management and then the trading plan comes in. But then they learn a number of different strategies based on different types of things that happen in the market. For instance, a trending strategy, a Fibonacci strategy, yeah, a hedging strategy. So they understand hedging as well. So even though we teach the strategy, it's for a certain reason and for a certain thing within the markets. In other words, they will get to understand hedging. They will understand the push and pull cycles, of a trend in market and when that trend disappears. They will also understand the consolidating market and where the breakouts may be. So my aim is to teach them so they have a fundamental understanding, not only of the markets, not only of the brokers, but how to trade. Now then, that's where the problem then comes. And I'll explain to you what I mean. When you look at all these traders and when you look at the people who lose, most of the people who lose are the retail traders. Number one, because they use retail strategies, they use retail indicators, and they have retail knowledge, which is so poor because most of the teaching out there is wrong. If it was right, then people would win. They don't. 85% lose. So that means 85% of what people learn must be rubbish. But what they get is when we teach them that, they then have a great foundation to be able to start developing their own strategies because they have all the tools in their belt to be able to start doing that. But what a lot of people unfortunately don't realize is that when you look at the 15% of people who make money, most of that is institutional, institutional traders. They have data streaming into their servers. They can see exactly what the market is doing, what the volumes are. Where I can see when a market is being pushed by the market makers to a certain position, and I know it's going to turn around before the market even turns around, because I can see that data stream coming in. Retail traders don't have that. So we have institutional trading techniques that we use with that data. I'll come on to algorithms later. But when you look at it, a retail trader has so many disadvantages to them succeeding. And that's what I don't like. Because they don't have the right training. They can't get the data streams that the big boys do to be able to really make money from the markets. And they can't get access to high-level algorithms either. You know, high-level trading algorithms and systems. So they really are disadvantaged. Now, within the teaching that we do, and with ProTrader and let me explain, sorry, we have a Forex Basics training program that just teaches people the basics of trading. Yeah, it gets them started. They also get a trading strategy so that they can practice using it. They get a trading calculator that gets put onto their MetaTrader that it actually works out what 0.5% of their account is, and you know, for the amount of pips. You've got to give people help. That's the thing. They can't do it on their own. But getting the right help is obviously the problem. Now, then, the strategy that we provide with the Forex Basics, I think I was telling you this when we were talking a week or so ago. My daughter trades that. She makes 5%. She's 11 years old.
And how old is she? And
Yeah,
how
11,
old is she?
11.
She is 11 years old. She has been trading this since 9 years old. And now this strategy, it's called the Asian rejection strategy. People get the software for it.
Would you like to explain a little bit about the?
Yes, certainly. Now, this is what
Would you like to explain a little bit about the strategy itself?
Yeah, certainly. Of course I can. Now, this is based on price action. Okay, and maths. That's the thing. It's based on price action and maths and what happens to the market at a certain period of time after the Asian session closes. Okay, so what we are looking for is a certain movement which will shoot above the high of the Asian session. It will form a certain type of bar, and then there's a trading strategy based on that. Now, that strategy, and this is our Forex Basics, they get the software, so we help them. They get the calculator so they don't make a mess putting too much money on and losing their account. They get the software downloaded that goes onto their MetaTrader that helps them and shows them where to get in and where to get out. They're taught that strategy, but that strategy is made more than the top hedge fund in the world has, as verified by Bloomberg, for the last 20 years. My daughter trades it at 11 years old. That's how easy it is to understand it. But that gets them going. Then we have ProTrader. Okay, so that's Forex Basics. And it's like, you know, it's not a lot of money for what they get. They're getting a strategy which is going to work for them every single year. You know, and then we have ProTrader, which is our full year's course. Now, ProTrader is actually the same course as the Masters, but you don't get the accreditation. And you can't follow our trading teams because we have a trading team that trade the markets. And when you're in a master's degree, you can see what trades they're placing every day, and you can follow them if you want. In the ProTrader, you don't. But it's a full year. But what happens is that we have live 12 hours a day, 2 strategies called Da Vinci and Newton and Da Vinci, okay? And they're live on the screen. So members who are getting the ProTrader course can watch that 12 hours a day and can place trades based on how we teach them. Now, what's that doing? Those 2 strategies use the data streams that we use to trade. So these streams that no retail trader can get, all of a sudden we're giving them access to it for 2 strategies. So they're actually getting the benefit of what the big boys have, because I have those.
Let me just ask you a question, Paul. Sorry for the interruption.
That's okay.
I'm just asking for how long those strategies are sustainable. Now, if speaking about the agent rejection, well, a little bit about it back. Right, so we have three main sessions, which is the Asian session, the London session, and the New York session.
Correct.
After Asian session closes, we have a 1 hour gap where the Frankfurt session happens.
Yes.
Right?
Yes.
Takes me if I'm wrong,
Yes.
for 1 hour, and then by 10 o'clock Israeli time and 8 o'clock London time,
Yes.
London session opens, and
Yes.
during that time, Asian session like to consolidate. If
Correct.
we're going to be looking at the chart, especially on the 5 and 1 minute chart, and Asian session creates a high and a low, and those areas are the most liquid areas because people want to sweep the liquidity. They
Yes,
want
they
to
do.
sweep the stop losses
Yes.
because they want to go to their to another liquidity zones. So speaking about this strategy, this is market mechanics. This is how market works,
Correct.
especially. But I want to ask you a little bit about the other strategies, how they can work and how sustainable they are. Because me and you, Paul, we know how great the agent rejection strategy is, but
Yeah.
it doesn't work each and every single time and
No.
not on every instrument,
No.
right? Am I correct?
Yeah, it works
One
on
instrument.
four. It works
So
on four instruments. There's four
yeah,
forex
four
markets.
instruments. This is it. This is it. And how much time do you need to backtest this strategy in order to make sure that it works? And by the way, I do have another question. How do you apply this strategy as it is right now onto your trading journal without participating? I would highly suggest you to participate with the UKTA, because they're incredible. And by the way, you will get to meet Paul, and he's an incredible guy as well. But I would like to ask you, Paul, for how long those strategies remain, because we know strategies tend to disappear
Yeah.
in a high frequency, of course,
Yeah.
because market change.
Now, the Asian rejection strategy is actually work. The software that I give you, you can go back to the beginning of MetaTrader. So you can go back 15, 20 years, and you can actually go and backtest it yourself, and you'll see that it's made more than the top hedge fund has, as verified by Bloomberg for the last 20 years. So when I say it, I've done that analysis, and I can see that working for many years to come. But we have to advance. I'm going to tell you a little story if you don't mind. I'm sure you're going to enjoy this. Okay.
Of course, I mind. I would
Please
like you
do.
to tell us.
So in 2012, I was in America on stage. I think it was Atlanta. I believe it was Atlanta. Okay. And this guy had been on stage, and I was really interested because he was a mathematician, just like me. And he was saying a lot of really interesting things. And after he came off, I'd spoken as well, so he knew about me. We sat down for a coffee, and we chatted about something that didn't exist. I can't believe what we chatted about, but what we did, we were talking about using computers to be able to model the markets and provide us with opportunities that would probably win. Now then, what we didn't realize 12, 14 years ago, we were talking about AI. Now that
So,
we were talking
what was
about,
the
what we were
discussion back
talking
then?
about was AI, but AI didn't exist really then. You didn't have AI to talk about. You didn't have ChatGPT and all of
What
these.
year was it?
It was 2012.
2012.
And the gentleman's name was Marcus Lopez de Prado. Now, he became a couple of years ago the number one quant trader in the world. Okay.
Yeah,
But
his name sounds familiar.
yeah, his
Yeah,
Marcus
he rang the
Lopez de
bell.
Prado. Okay. Now, Marcus did a fantastic book after that. All right. And we were both chatting. But what I'm trying to say is that we were actually talking about something that really wasn't invented then. It was artificial intelligence. It was algorithms, because we're both maths. It was algorithms looking at the markets. But how do we make it self-learning? Okay, how can we make it self-learning? So if the markets, and this is your question, okay, Afek, if the markets change, how can that algorithm change to be able to adapt to the new market? So you've still got excellent entries and exits. Okay, then, as I said, we didn't realize we were talking about AI, and sort of 10 years later, I was going to be designing my own algorithm, which which I'm running at the moment very successfully. That is fantastic at telling me when to get in and when to get out. We use that now as our proprietary system for trading.
Oh my
Now,
God.
Oh yeah. No, I
Uh-huh.
wrote that. It's about 8 pages of maths. Okay, if you want to know, it's 8 pages of maths, but it works. But then I realized
What do you mean 8 pages of math? Like, of
formulas,
course, trading.
calculations.
Yeah, of course, but it's all about graphs, and it's all about looking at the past data and understanding where to enter and where to exit.
Yes.
But what do you mean by planning a strategy with 8 pages of math?
Okay.
Because that doesn't sound really familiar to me. I'm
The
sorry, Alan, for stopping
no,
you from asking a
no,
question,
that's
but
No,
I just needed
it's the
to
same
to to
question.
ask it.
What goes into that?
an algorithm is basically a load of mathematical formulas that are going back and looking at things and doing things. Yeah, and it
Yeah.
provides you an output from that data. So I designed my own algorithm 2 years ago, which is running now. It takes the live data coming in so the market index, the live data coming in from the market, it goes through the algorithm, and then it provides me ideal buying and selling opportunities on a range. We're not talking now like the Asian rejection strategy, which is a simple strategy. It just works so well. We're talking about this can be used on multiple markets, even Bitcoin. It can be used on indices. It can be used on forex. It can be used on whatever. And it works. It's incredible.
You
But
mean
the thing
like
is,
a universal strategy?
yes, it's almost but it's based on the movement of that market in the past. So what it is doing is that algorithm looks for certain type of movement in the market. It's looking for a small window in the market, and it assesses the movement of that market. What it then does is it then goes back to the beginning of time, literally, and it'll look at how many times that has happened in the past. And it then gives us a percentage of the number of times that the market did nothing, the market went up, or the market went down. So until it hits a 70% accuracy rate, in other words, when it sees a certain movement in the market, unless that is a 70% of something, and what I mean by something is it either went flat for 70% of the times that it made that movement before, or it went up or it went down. Obviously, we're looking for the ones that go up or down. So I know that when it gives me that output from the algorithm, I know that in the past, 70% of the time, the market's gone up. So I'm going to be placing a buy. Now, what it also does is the way that we do self-learning is that within the software, if it sees a movement of the market that it hasn't seen before, it stores that in the database. And it starts accumulating data for that to see what that then does. So if the market changes, it's automatically looking for new movements in the market to start verifying to see what they did. So if the market changes, the algorithm, the algorithm is actually looking for those changes and then assessing it. So it's learning all the time. It keeps learning, self-learning all the time. If it sees something different, it'll say, hang on, I'm going to park that. That's something different. I haven't seen that before. And I will look for that in the future now. Is it happening more or less? And there's some things that I can see if I look back on the data where something was happening in 2012, 14 that was very successful. That movement doesn't happen very much now. So it's learning all the time itself. So that gives us the edge in the market, that we need to be able to trade very successfully. Very different, I know, maybe than some of the people that you've spoken to before and the information that I'm giving you. But it's good that people understand this because then they can see, hang on, look, I need additional information to able to help me trade properly. Now hopefully they can start to see from what I've said, why they're failing or why, they're not being as successful as they need to be. Because there's a number of pillars to being a successful trader, and they're most probably missing a few. So a little bit rockety.
Wow,
Sorry,
that was an
I hope I
incredible. That
haven't
was an
blown your head
incredible. Yeah,
there.
I need to wrap it up a little bit. As a CEO of of a trading company,
Yes.
I tend to meet with a bunch of traders and a bunch of algorithmic guys, and I need to tell you, Paul, that your ambition about trading, in particular, other trading is like it makes me feel that I'm in the right place because you speak with a bunch of happiness and joy and about what you do, and I think it's really fascinates me. So go moving back to our discussion,
Mm.
I would like to ask you, Paul, a few questions.
Yes.
Now, the first question would be, um, how would you trade? What first of all, how do you participate in the market in nowadays?
So I say again, how do I
How do you participate in the market nowadays?
certainly? Uh, I pretty much now are always using our algorithmic system to be able to provide me the information. Okay. I'm participating in the markets, mainly in forex and in indices and in gold. Okay. Those are those are the main markets that I participate in. It's a very relaxed trading because I am allowing a computer to do all the hard work for me to generate opportunities. Now then, I'm not some robot either. I'm a human being. So when that gives me an output, I don't just place a trade. I look at the market sensibly myself to say, does that make sense? Because
Hmm.
you could be given a number of entries, and to me, it doesn't make sense for some reason because I've got a sound trading understanding. I understand all the various concepts of that. So I don't just necessarily do those trades. I cherry pick, very much cherry pick to
And
make sure that I have a high win
and
rate.
how do you analyze it? If you cherry pick trades, how do you analyze each and one of them?
The algorithm actually provides me data on the MetaTrader. It'll show me what the market is doing. Now, the data that's coming in tells me a number of things. First of all, it tells me the amount of volume being put into two separate currencies or an index or something. But let's just take something simple, and then hopefully the listeners will be able to understand this. So I can see how much volume is being put into the euro and which direction. I can see how much volume is being put into the US dollar and which direction. I can also see the rate of volume increase or decrease. Okay, so I can see when it's really starting to shoot. All of that is displayed on my screen. I can see all of this information. And all I'm doing is I know what the market makers are doing. I know when, they're putting their net out and they drive the market in one direction. And then every retail person's indicators are too late, unfortunately. 3/4 of the way up the slope when the market's gone up, buy. So they've got all of their buys in there, and then they just move the market the other direction. But I can see when the market's going to be moved the other direction. I see the volume slowing down, and then they take it the other way. And I can actually, and the market representation is always a little bit delayed from the volume. So I can actually see when the market is going to be reversed before the MetaTrader or TradingView actually shows it. That is the great, that is the tools that the top guys have to be able to trade. That what makes them apart. Now, the reason that I show the two strategies, Newton and Da Vinci, is that retail traders cannot get this. So if they come on my Pro Trader or my master's degree course, they get it 12 hours a day on two different markets. So they get a chance to be able to join in with the best data that is available in the world to trade, with the algorithms that are running it. They actually see it live on their screen from 8:30 in the morning till 8:30 at night UK time. They can actually trade with the same data that the big boys have. That's what it's all about. Sharing with, we're saying that retail traders can't get these. Well, why not? Yeah, why not give them an ability to be able to use, some of the stuff that we have coming in? It's okay to say, oh, well, I'm a great trader because I got this. How can I share it with others? It's great that I got all of this information on how the markets move. How can I share it with others? Because, you know, I've been through some black times in my life, as I told you, when I had the divorce, I went bankrupt, and had to bring the kids up in a caravan, on a scrapyard. But the thing is, I've done well. And what I want to do is to try and give as much as I can back to people, in different ways. And these are the sort of ways I'm trying to do it, teaching people properly, giving them the right information, giving them some the strategies that work. Plus also the stuff that the big guys have to be able to make the money. I'm streaming 12 hours a day. That data costs £5,000 a month just to stream into our service.
Well, just a second. You stream 12 hours a day?
Yeah, I stream live 12 hours a day. 2 strategies, Newton and Da Vinci. People can follow them. They have this, and those 2 live stream strategies are using the market index, the algorithms that I've developed, but nobody can get their hand, only the big boys can get their hands on. Anybody can, because we're part of that Pro Trader course of Masters.
Paul, can we please dive deep into one of the strategies, the Newton or the Da Vinci?
Yes.
Is it possible?
Yeah, okay. Let's
Can you educate the audience about one of the strategy?
Okay.
Educate us.
What strategy do you pick? What strategy you much prefer to talk about?
Da Vinci. Okay.
Da Vinci.
Leonardo da Vinci.
Right. Besides Da Vinci, been an artist, is now a strategy right now.
Yeah, he is. He was more than Da Vinci was more than an artist. Actually, he did a lot of good stuff and developed.
Da Vinci.
We now know, like submarines and things like that. And he was thinking about that a long, long time ago. But
and just to clarify, retail traders cannot use the Da Vinci strategy simply because they don't have the information.
They don't have the data. They don't have the data streaming into their servers, and they do not have the algorithm, obviously. So what we do is we display it on the screen so they know, and we teach them as part of the Pro Trader and the Masters how to trade it. We teach them how to trade it so they can spend time during the day, trading that in their members area. It's live stream 12 hours a day. So let's take Da Vinci.
Mm-hmm.
Now, the way that Da Vinci works is Da Vinci is looking at the amount of volume and the volume decrease in a market after it has moved. In other words,
in forex markets.
Yeah, forex markets or in gold or in anything pretty much, even in it's brilliant at Bitcoin.
Really?
Yeah.
How do you can look at volume trading forex because you're not exposed to literally nothing when trading forex?
When you're trading forex, you can get data. It's from Jefferson's
You
Bank.
can get data.
It's from Jefferson's Bank. It's called the market index. It's from Jefferson's Bank. And I got it in 2000, the license for that in 2014. You have to be trading for X number of years. You have to be trading a certain volume of money. And it does come from a subsidiary of Jefferson's Bank. The subsidiary is the data supplier who they supply a lot of data. Yeah, they supply the data that brokers will bring in to run the MetaTraders, to run TradingView, etc. But they also do specialist index data, volume data, speed of data for all the major currency pairs. They don't do Bitcoin yet, and they don't do the cryptos yet because there's not enough volume. I know it sounds stupid. There's not enough volume in crypto, but it's not. It's tiny. It's a tiny little pond. My back garden pond is crypto, and the Atlantic Ocean is forex. So it's very, very different. It still works, but it's very, very different. So what happens is that we are looking for the market to be pushed by the market makers in a direction. Don't care which direction it is. Then what we look at is the rate of change reducing dramatically, and it'll form a little wave. Okay,
so basically you enter a position, you wait for the market to get decisive, and then you what?
So what we do is you will see the market moving, and then it will get to a point where the volume change in a different direction. So say it's pushing it down. Okay, so say Euro USD is going down. Okay, so you're looking at the euro being and the USD. One's being pushed up, one's being pushed down, but one is greater than the other, obviously, to get a movement in the market. We will wait. So the system is looking at it and it's waiting until that market move is over. Now we can see that because we can see the volumes reducing dramatically. Okay, it's full green, for instance, 20, 30 billion every 5 minutes. And then you'll see it coming back down. It's like a rev counter in a car. And we're waiting for that to come down and then go the opposite direction. And that's where we enter. So everybody's selling and we're buying. Well, everybody's buying and we're selling because we can see from the data when the market's about to move there, change direction. And I would say it's most probably 75% effective. In other words,
Wow.
75%, you know,
For how
75%
for how
of the
long?
time,
For how long period of time?
yeah, it'll go the right direction 75% of the time. But
This is market
this stuff, you know,
mechanics. It's
we're
no longer
talking about
words.
what the institutions have here, you know, that people normally don't talk about that because they don't know, you know, we're an institutional trading team. So, you know, we've got the same data. So we're using that data to help people, not just ourselves, but to help people 12 hours a day, live streaming those two strategies.
This is incredible.
You're
This
right.
is literally incredible.
It is incredible.
Yeah.
I'm just shocked, man. I'm just shocked. Because you know, people in this industry remain so silent and remain so under the radar. And you, Paul, and your team within the UKTA comes out and you actually tell the world, hey, my name is Paul. And I would expose my trading strategies, streaming 12 hours each and every single day, and I will help you make money.
Yes.
This is slightly different. And you know, as the client eventually, I would ask myself twice if that thing is actually real. Because, you know, people tend to have a due diligence before making a decision, especially in the markets that we're intervening. Um, um, how do you convince somebody that you are legit and you will deliver something worth of value?
The way that I do it is quite simple. What I actually do is show people. Don't tell people, show people. I have, you know, I have webinars that I do where if people are interested, they come and have a look. But I don't tell them a load of rubbish. I don't, you know, blow smoke all over them. I actually say, this is what we do. This is how you do it. This is what you're going to learn. This is what you're going to get out of it. And by the way, let's show you. I actually show, I go through the Asian rejection strategy and say, let's look at the last month. And we go through it and say, look, there's the entry. This is how we do it. There's 1%. Here's another one, minus 1%. Ah, that's 0. There's 1%. Okay, so in this month, then we've made 7%. Lovely. Thank you very much. So I actually show them. You've got to show people. You can, everybody says things. Everybody takes snapshots of, you know, so I can make a different strategy every single day of the year and sell it and do a screenshot which shows the beautiful winning trade, but it doesn't show the 10 others that lose. Yeah. And I market that. Look at this and look what this strategy does. £97, please. Thank you very much. But that's no good. You're cherry picking. You're just showing something. You want people want to be able to see something bigger nowadays, be able to understand what they're getting. What am I going to learn? What am I going to get out of it? Yeah. And how much better am I going to be because of it? And if I can answer those three, you know, how is it going to work? All of those different ones, then I've done my job properly because I show them. Just like the people who's, you know, live stream 12 hours a day, I'll actually get Da Vinci up. Here's Da Vinci. This is what I'm talking about. Have a look at how we would trade this. Here's Newton. Have a look at how we would trade this. And I just go back and say, look, this is how we would do it. See, there's some losers. You're going to get losers. You know, anybody thinks they don't get losers. It's, you know, it's a load of rubbish. 97% success rate or 100% success rate doesn't happen because it's a load of rubbish. It's all this stuff being put out by people who just want you to buy their product, take your money, and don't give a damn what happens to you. We do. You know, we have an academy, we've gained accreditation because of our reputation in what we do. We've had literally all the skeletons dragged out of the cupboard when we were doing this accreditation to make sure we were the right company out of everybody in UK and Europe to do it. And I like to show. I like to show and explain to people, because for the thing is with it's the biggest industry in the world. Was it $6.5 trillion a day? But the problem is the biggest number of scammers in the world in this industry as well. Just out to make a quick buck, and they don't care about people. You've got to sift through very hard to find the right people to help you on your journey. At the end of the day, it's a journey, and if you can get the right people to help you, and I'm not saying we're the right people, I'm just saying if you can find the right people to help you, then you can do well in this industry. But unfortunately, most people don't, because they get led in so many different bad ways, And I'm going over. I'm speaking. There's a couple of conferences coming up. I'm speaking on the IX Trader Show. I'm one of the main speakers in the IX Trader Show in London on the 27th of this month. Then I fly over to. This is an interesting one. I can't tell you the name of the broker, but just think about what they're thinking about. Okay. I fly over to Dubai for the biggest expo in the world, Forex Expo, on the 7th and 8th of October in Dubai. I'm flying over there. The third largest broker in the world has come to us and said, look, you have got the accreditation. We understand what it means. Can you please help us to get our traders successful? Now, this is a broker saying, if only people could win more because they're being taught properly, we'd actually win more, because obviously they're not market makers. They take a spread, yes? So they're just taking money every time somebody places a trade. The more people that place a trade, the more money they make. But if people are making money, they're going to place more trades because they're being successful. So I'm actually going over there and meeting the main board of directors of the third biggest broker in the world and saying, and their question is, how can you help our traders become successful? So that tells you something about how the industry is starting to think. These are the third biggest broker in the world, and they're actually saying to themselves, we don't want 85% of people, because we now have to say by law how many of our clients lose money, and it's a high amount. If we could be the lowest in the world, everybody would come to us. Now, that's a different type of thinking from a broker. And I'm trying to instigate that type of thinking, where it's not somebody comes to a brokerage, they put money in, they blow their account, leave it for a while, maybe I'll put some more money in. No, why don't you learn to trade properly and actually make money if you're interested in this? Learn the right way of trading and start making money yourself. Then it's self-perpetuating. They want to be the broker with the lowest number of people who lose, money in their brokerage. That is their whole concept. And they want us to try and help them do that. But it's nice to see that they're thinking a little bit differently, because I know I'm an old man. Yeah, I get my Zimmer frame now and sort of walk away.
You're not an old man.
But
Definitely
I've
not.
got such modern methods of thinking.
No, you're not an old man. No.
But we want people to succeed. So the way you get people to succeed is give them the right training, give them the right tools. Tools that they
Absolutely.
can't get from anywhere else, because the others don't want to give it to you, because the thing is, retail traders are the cannon fodder for the institutions. So why would the institutions want to say what they do and how they make money, and the retail traders don't? Because, they're picking their pockets all the time. So why don't us little guys fight back for a change?
Absolutely. Absolutely. So, Paul, actually, well, we have a last question before we need to move on to part B. In the
Okay.
future, we would love to shoot another episode with you, because you're so energetic and you're so fun, and we're having a great time listening to you. At least myself, I'm sure that Alan feels the same. Um, how it's like being conference talking to a handful amount of people that all intervene
Handful?
with the same.
I think it's in the hundreds, if not thousands,
Yeah,
right?
hundreds. Yeah,
Yes.
yeah,
Yeah.
yeah.
And
Hundreds
the
amount of
ones that I'm
people.
doing next are 1,500 and 2,500.
Oh my God. So how it's like talking to hundreds of people within the same industry that compete on the same price and that enough resilient to take your business away. Okay,
That's
let's put the things on table.
yeah, that's an interesting question. To I really don't care about anybody else, right? At the end of the day, I have got this fixation in my head of how I can help people. If I upset others along the way, then bad luck to them. I want to try as far as I can when I'm on stage and I've got all of those people, as you say, I want to engage them in good information, not information that they want to hear. I want to give them information that they need to hear, because if they get the right information, they can make the right decisions. Too many people are just telling people the things that people want to hear. That's what I find when I go around. I do a lot of these and I hear other people speak. It's too nice and easy, if you know what I mean. They make it sound oh so simple and it's easy for you to do. And I tend to flip that. One thing that I say, just imagine it's an amazing word. Imagine being successful in trading every single month. Now that's a great, yes, people can imagine it, but this is how you've got to go to get there. This is the journey. That is the vision. That is the end result, if you know what I mean. But can you hear a noise on there?
Again?
I can hear a noise somewhere. Can you hear a noise or not?
No,
No.
no, no, no.
No, you
It's all
can't.
good.
Okay, great. So let me carry on again. What I like to do is make sure that people hear the right information, get the right information so that they can understand what really happens in this industry rather than being given incorrect information. And I
You're
think
so
it's so
right. You're
important.
so right. And I'm so grateful for having such people like you within our industry. Like it's a privilege. Actually, you guys, I really need to stop all from speaking because I would really need to
Yeah.
tell you guys after interviewing how many did we interview Alan so far? 60, 70 elite traders.
Right
I
now
would
it's
highly
the
suggest
15th episode.
Wow.
I would highly suggest you guys to go to the UKT, the UKTA.com. Am I right, Paul?
It's UKTradingAcademy.com.
.com. All right, go there and sign up. You'll be exposed to Paul and the rest of the team, and I'm sure that if Paul is there, you'll get the much experience that you can ever get out of any plan. Because Paul is an incredible man, and an incredible teacher, an incredible model an incredible influencer to model. So I would highly suggest you guys to go there to UKTradingAcademy.com. Go there, sign up for everything that they offer if you're serious about trading. Now, this is not sponsored. This is the thing that I wanted to highlight, right, Paul?
Yeah.
This is the thing that I said to you because I really care about education and how traders get educated across the world. And I think, Paul, you are an incredible individual to go and learn from. So I would like to thank you for your time. And I would like to say how much I appreciate your presence within our podcast. Part B will happen soon, so stay tuned.
Part two
And
for
thank
sure.
you. It was an
For
incredible
sure.
pleasure.
Definitely.
Yeah, and you have. I also want to say, it's great that we have two younger people in this industry who are like us, trying to get great information out to their listeners so that their listeners become more informed. And
Absolutely.
I would always be happy. And yeah, these guys have said this, but there's no affiliation between us. They don't get any money if these listeners go to UK Trading Academy and buy anything. They don't. They're
You can
doing
pay
it
me.
because they what? Yeah, they don't at the moment. No, you don't, do you? Let's be honest, you don't. If they did, I'd tell you they would. But what I would be prepared to do for you guys, okay, for your listeners, is to do a special webinar for them where I can explain UK Trading Academy. I can explain the courses. I can explain what we do. I can show them. I can show
Pleasure.
them all the strategies running live on the
Deal.
screen. They can see it. I am prepared to do that because you guys are doing a great job getting the right information out to people. And I'd like to give something back to your listeners. How about that?
Super, super, incredible.
And I may be able to
So,
add a nice discount to whatever they want to buy as a nice thank you.
incredible, incredible. I might be a customer as well. Who knows? So, to close, Paul, super, super, super happy for the opportunity to have you here. Guys, I hope you enjoyed. See you next time on the Trade Pod. Bye bye.
Bye,
So,
everyone.
Paul, I just want to say thank you. I really appreciate what you do. We need more people like you. Seriously.
Thank you very much.
Absolutely, absolutely.
Take care, everyone.
See you. It was a pleasure.